We're proud to welcome you to the Exceptional Advisor podcast series, brought to you by the Investments and Wealth Institute. This series aims to help you to better serve your clients, differentiate yourself from the competition, and enhance your ability to communicate those differences. Hi, I'm your host, Bob Powell. My guests today are Dan Otter and Scott Dauenhauer. So, Scott, Dan, welcome to the podcast.
Great to be here.
Thanks for having us.
It's a pleasure to have you here. But before we get going, for the benefit of our listeners and viewers who may not be familiar with you and your work, do you mind giving us a brief overview? Dan, you want to go first?
Sure. My name is Dan Otter. I'm the executive director of the nonprofit 403bwise.org. This is an education and advocacy website aimed at the K-12 403b. I'm also a former teacher and college professor.
Scott?
So I am the director of research at 403bwise.org, but I also have my own financial planning and investment management business. I have my own RIA, Meridian Wealth Management, which I started 22 years ago, I think, and basically used to service teachers. I do fiduciary financial planning mostly for public school teachers.
So, Dan, for folks who may not be familiar with 403b Wise and its founding and its evolution, do you mind sort of talking about that?
Sure. It started way back in the 90s. I was an elementary school teacher, first year in the job. The kids had left for the day. I was frantically trying to get ready for the next day's instruction when there was a knock at my door and a woman poked her head into my room, and I'll never forget what she said. "Do you care about your financial future?" I mean, that's a jarring comment to get anytime, but especially in your own place of work. And so I said yes, and she took that as an invitation to come into my room, and she started talking about all these investments. Bob, I had no idea what she was talking about. I had some notion of a pension. I knew that if I taught X number of years, there'd be some formula in retirement, but I did not know what she was talking about. She mentioned how she helped other teachers in the school. She literally had paperwork all filled out, and all I had to do was sign, and I think like $100 a month would have come out of my paycheck. But I just didn't sense this was right. So I said, let me take a look at it. If I'm interested, I'll get back in touch. Didn't get back in touch, which turned out to be lucky for me, because as I began to self-educate myself, I learned that teachers, in addition to a pension, have a supplemental retirement plan called a 403b. Works pretty similarly to the 401k with one big exception. It's not subject to ERISA, the Employee Retirement Income Security Act, so the employer has no duty to act as a fiduciary. So what I learned was this woman and many others were selling high-cost annuity products, 2-3% interest, onerous exit charges. And I began to get pretty angry about this. And I went to my school district, found out we had 100 different financial companies selling 403b products. Luckily, at the bottom of the list, somehow, some way, Vanguard was on that list. And I had by then heard about index investing, John Bogle. So I signed up with that, felt pretty good. I would sit in my staff lounge and I would hear colleagues talk about their guy or their girl. They're talking about their investment people. I began to ask questions, and they all said something that was like really stood out to me. Oh, there's no investment cost. And I said, look, I think there are. And again, I was no expert at this time. So I said, bring in your statement. I'll take a look. And I was able to identify the fees, and they were pretty exorbitant. And a colleague said, well, you should do workshops for teachers. This by now is the year 2000, and it's when people are launching websites. So I launched the website 403b Wise, and at the time we were at .com. And it must have resonated. We got interviewed by U.S. News, World Report. I reached out to an NPR program called Sound Money and said, I love what you do on the 401k. Why don't you do something on the 403b? They interviewed me. It just kept snowballing. And I began to meet great people like Scott Dauenhauer here. But the big break for 403b Wise was in 2016 when the New York Times did a series of articles on the K-12 403b. Scott and myself were the lead sources for them. And a gentleman named Tim Ranzetta, who is a philanthropist in the Bay Area, who runs his own nonprofit. He's working to get financial literacy a required class in K-12 schools. His goal is by 2030, every kid graduating from an American high school will have taken a standalone personal finance class. He's already halfway to getting all 50 states. Anyway, he reached out to us and said, I love what you're doing. I'm horrified that teachers are getting ripped off in their 403B. Is there anything I can do to support you and help you? And so we started having conversations. And thanks to his generous support, I was able to leave my job at the University of Redlands, and I now run 403bwise.org full-time, and we are now a nonprofit.
That's great. So a quick follow-up. How did it come to pass that 403B plans were so annuity heavy versus, say, 401k plans, which are so investment heavy?
Such a good question. So this surprises a lot of people. The 403B actually predates the 401k by 20 years. 403B was founded in 1958, and upon inception, only annuity products could be used. And this didn't change until 1974 when mutual funds were permitted. But the industry got their meat hooks. The insurance industry got their meat hooks into this market. Plus, coupled with the fact that they did not include it in ERISA, the 401k founded in 1978. Part of ERISA, the employer has to act as a fiduciary. If they don't, there's some financial consequences. Some of them very severe. It's just not the case in the K-12 403b, unfortunately.
And it also strikes me, I don't know if the same is true for 457 plans or not, but advisors are also advising folks on those plans as well. Any thoughts about the comparison between all three of these plans?
Yeah, in fact, I would point to Scott. Scott's got a lot of knowledge around this because there are some things that make it a little bit more of a fiduciary requirement.
The 457, while there's I guess technically no net federal law that requires fiduciary duty, much of the language of 457 for governments, especially after the Orange County bankruptcy all those years ago, there actually is like an acknowledged fiduciary duty for 457. And what you will also see is that most states have also passed their own fiduciary laws that apply to 457. I mean, you can literally find them in their state laws, and much of the time those laws are an echo of ERISA. Sometimes it's the exact language of ERISA. And it's not really controversial. What we don't understand is why those same laws do not apply to the 403b. Why do all public sector have this special protection that public school teachers are exempt from? Except for their 457, which almost nobody has, because the people selling 403b don't want you to know about that 457.
Yeah. We'll talk more about how we can get 403b plans to be covered under ERISA in a second. But I'm curious, there's a thing that I always think about. Like, people always have this judgment around annuities being always bad. And I always think of them as neither bad nor good. There are certain facts and circumstances when they might be appropriate. And in the case of 403b plans, they may be appropriate for some people if perhaps they don't have enough guaranteed sources of income to cover their essential expenses, for instance. But to do that, you would have to have an advisor who goes through some sort of calculation to determine whether this is in someone's best interest or not. Is that fair to say?
Yeah, I would agree with that. And, one of the things I always say in conversations with teachers, the majority are covered by a pension. So they've got this guaranteed source of retirement income. And in many cases, I think teachers can take a little more risk because of this. Again, it depends on how financially secure your pension is. But if you're going to be in this career 25, 30 years, I think, it could be wise to supplement that pension with just a low-cost index fund, just what Warren Buffett says.
Right. So you've been at this now for 23 odd years or so,
Yeah.
right? Which is a generation. What is the state of it now? Like, have we moved the needle at all, given all the work you've done?
I love this question because I like to joke. We must not be very good at our job because here we are still trying to resolve this. So we think there is more awareness around K-12 403B issues. Folks like you, Bob, we have so much respect for, looking at this issue. The New York Times doing a series of articles. The SEC just fined one of the biggest players in the market, Equitable Financial, formerly known as AXA. They fined them $50 million for failure to disclose certain fees. We like to think we're playing a small role. We have a very active Facebook group, 403BY's Facebook group, and we have over 13,000 members in this group. And on a daily basis, we're getting at least a dozen posts. And Bob, they're typically, I didn't realize what I was investing in. I thought my employer, my school, had sanctioned this individual. He or she was at the lunchroom. They had sandwiches. They had pizza. They behaved like a financial advisor, and they put me into this product. And I'm now finding out it's exorbitantly priced. How do I get out of it? Vanguard is increasingly being found on vendor lists. In fact, Scott and I have been invited out to Vanguard. We've spoken to them about how they can play a more active role in this. Fidelity, I know you're in the Massachusetts area. Fidelity increasingly is being offered. We are seeing school districts like Chicago Public Schools going to single vendor. That may be something that listeners don't know. Most school districts are multi-vendor. I talked about my school district in Southern California being 100. I live in a different town now in Southern California, Redlands, California. We have over 40 vendors, and 37 are terrible. And yes, while Vanguard is there, Fidelity is there, and then there's another low-cost provider, CalSTRS, Pension 2. The problem, Bob, is most of the money is going to the salespeople, not to these low-cost vendors, because people still need to find out about this. So yes, I feel like things are getting better. I know we're going to talk about our rating system. We are getting a lot of great attention around this, and we're getting school districts reaching out to us, wondering how they can actually improve their plans. So we think the needle's pointed in the right direction. But boy, when you're not part of ERISA, it really makes it a slog.
Yeah. You mentioned the district plan rating system. I'm eager to hear more about that.
Sure. So you keep telling people these plans are terrible, and then people said, okay, let's get some data. And I'm going to credit my partner here, Scott Dauenhauer. Scott created a system, very simple, where we start by rating the vendors, and we do it on a very simple scale. It's green light, yellow light, red light. We all know that game, right? Green, go, yellow, caution, red, stop. So first we rate the vendors, and then we assign grades to school districts. And there are over 13,500 school districts, and we've managed to get data on 4,500 of them.
Wow.
Because we focused on the larger school districts, we believe we now have data covering over half of school employees at public schools. And the grades are grim, Bob. I'm just going to read you our latest data. So out of 4,586 school districts, only 144 receive an A. To get an A, you have to be single vendor. You put the plan out to bid, like Chicago Public Schools, Anchorage Public Schools, Montgomery County Public Schools, outside of Maryland, and you select one low-cost vendor. So only 3% of the schools we have graded, which we believe is 50% of all schools in the country, receive an A. Only 19 have a B. With B, it's a very similar formula. You have to put it out to bid. You're allowed to have 3 or less vendors. And Philadelphia Public Schools has 3 vetted vendors who are high cost, Bob, when they're part of a big multi-vendor environment. But when they're forced to compete, lo and behold, they lower their prices, their pricing. And then the big swath of school districts fall into our C rating. We have 2,868 get a C. And to get a C, you simply have to have just one of our green rated vendors, a Fidelity, a Vanguard, a CalSTRS, Pension 2, and we've got several others, which you can see on our website. But then 40%, close to 40% are D or an F. To get a D, you don't have a green, you only have one yellow, which these are okay. But again, we'd rather see people in these green vendors. And then the F, no yellow, no green. We have over 655 school districts in that group. So that is our rating program.
Yeah. How many schools are putting out these contracts for bid?
It's
typically?
a pretty small.
Is it
Scott, you
growing?
want to answer that? Because Scott's been a
Growing.
consultant with school districts.
A decade ago, maybe, there might have been a couple. But today, we're seeing it on the 457 side quite a bit. And then on the 403B side, we're starting to see it a lot more. Dan has mentioned 3 of them. There are actually several school districts in Colorado, like 4 or 5 rather large school districts in Colorado that got single vendor. And then in just kind of random places, there will actually Georgia, we're seeing several. Alabama's got a few. So it kind of depends on who catches the bug and decides to take the initiative to do this. So it's catching on. We think it's gonna. I don't have any expectation that this is going to be completely changed in the next 10 years, but I do think 10 years from now there will be very few of the top 30 schools that are not single vendor or at least bidded multi-vendor, and I think that will be a win for educators.
Yeah. Yeah. So it strikes me that in some of these school systems, maybe not in the larger ones like California or New York, but that people may not have the background to evaluate this, right? You have a school committee perhaps or a superintendent, and this is sort of out of their bailiwick, right? They don't know what they don't know around this topic.
That's so well said, and we always have some empathy for school districts. I taught in public schools for close to 10 years. They have so many things on their plate, and let's face it, this is a supplemental plan. But as Scott likes to point out, firefighters have really good pensions, and they have a 457, and it's really good. So why can't this other public sector employee group have really good plans? Now, if you are a school benefits official listening, yes, we have empathy for you, but you also are facing a teacher shortage, a national teacher shortage. And how do employers attract and retain the best and the brightest with good benefit package? I think this is a perfect opportunity to put your plan out to bid, to get a better plan. And at the very least, it doesn't take a consultant probably to simply add a Vanguard or a Fidelity. But you are right, Bob. There are some resources and there is an investment to doing this the right way. I don't ignore that fact.
So maybe talk a little bit then about how these plans can be improved in addition to maybe a better search for providers. What can plans do?
Absolutely. And I'm going to start off by reading an email I got 2 weeks ago. So this is a bad example. So a lot of times in teaching, when I was a student teacher, I observed some really bad teachers. And sometimes a negative example is a real way to learn because you don't want to be like that. So school districts, don't be like this. Here is an email an employee in a New Jersey school district got. Good morning. During your lunch periods on Friday, representatives from Equitable, again, this is the company just fined $50 million by the SEC. Of course, it didn't say that in the email. Representatives from Equitable will be available on site in the staff lounge as a resource to answer any questions you may have regarding your financial strategies and payroll deductions for your 403B. Regards, Human Resources Manager. I mean, this is a gift. This is throwing, the sheep into the wolves. So I would do a couple things. One, provide unbiased education. Do it at the beginning of the year. Do it during all these professional development workshops. This is going to sound self-serving, but we only have one revenue source, and that is our benefactor, Tim Ranzetta. We sell no financial products, but almost now on a weekly basis, we do free 1-hour Zoom sessions called Get Wise to the 403B and the 457B. We've probably done close to half a dozen in Massachusetts in the past year. So if it's not us, find someone else to provide objective advice. Do not do what San Francisco Unified School District used to do. New teacher fairs, they would have Equitable do the so-called education. Do not do that. Provide unbiased education. offer at least one low-cost vendor. And if anyone listening has any connections at colleges of education, teach the teachers about saving for retirement and the 403B before they go into the classroom, because they are so vulnerable. There is such an information asymmetry going on between
100%.
financial salesperson and a new
Dan has
teacher.
no idea what he's talking about.
Well, it's a job.
Joking. He does. No, I would build on that. I mean, that's perfect answer.
Disagreed.
We would also like to see better transparency and disclosure. Nobody actually knows. Okay, I'll take that back. There are people who know what the fees are, what the costs are, but it's usually not the people who are running these plans. And I say running these plans, most of the time they're just looked at as something that has to be done. And I really think that the school districts need to be more involved and take these plans seriously. And part of that is really understanding who is distributing these products, how do they make their money, and what are the fees involved. Very few school districts know this information. We've done some work with a few school districts to help them disclose the products that are being done, and that's a start. The other things we'd love to see are just kind of the same things that we see that have been so successful in the 401k world. It's funny because we have a model of things that work in the 401k world, and that's auto enroll, auto escalate, these types of into target date funds, these types of things that we know work, and they're not being put to work in the 403b. And they're simple things. They're not allowed in every single state. That's part of the problem. Every state has different rules as it applies to auto enroll and auto escalate. And then we also have some issues where some states can't actually do single vendor. It's literally illegal for them to put their plans out to bid, which is bizarre. So yeah, we have some work to do, but I mean, what Dan said and the few things I added on, those would really, I think those would really improve the current state of things.
Yeah, I know I said before we started recording that if we had to build this thing from scratch, it would look nothing at all like it looks like today. You've just given more evidence that that's the case. That's insane. Which brings me to this question, which is there any possibility of these plans becoming regulated under ERISA and the Labor Department?
I think it would be such a big lift, Bob, to do this. And again, we're called 403B wise. We focus on the 403B, but here's the recommendation we give people, especially new teachers. Start with a Roth IRA, okay? Most young teachers don't have the income that would require them to have to get the tax benefit of contributing $20,000 plus. So they wouldn't even be able to contribute that much as beginning teachers. So do a Roth IRA. You can choose any company you want. You like Fidelity, you can do Fidelity, Schwab. You know all the different low-cost companies they can go with. The second thing is look at the 457B. Increasingly, this is being offered. And not only are school districts offering 457B plans that are generally better, not always, but there are state-based plans. So take the New York State Deferred Compensation, for example. They have over $23 billion of assets under management. They have some of the lowest cost index funds that Scott and I have ever seen, and they are available to every New York school district that wants it. Ohio Deferred Compensation is another one. And in Ohio, you can actually sign up online. I know that sounds like obvious for all the 401k participants, but not having to like fax in a document, which you often have to do with the 403b. So in a perfect world, yes, let's make the 403b, the public 403b plan, subject to ERISA. I would love it. We just don't have deep pockets in the K-12 world, right, to lobby for this. So short of that, Roth IRA, 457B. And again, I don't know if school districts, I would just almost offer just a state-based 457B where allowed. And the last thing I'll say is you have states like Pennsylvania, great 457B. They don't make it available to teachers.
Get applied to
just so many things that need to be improved.
403B, mainly because it would also have to be applied to 457. And you're not going to get any state and local governments to support that. They're just not going to. And that's fine because we have a roadmap. State and local government plans used to be, these 457 plans used to be a complete mess. 30 years ago, they were a total mess. So much so that, everybody who was in a 457 plan in Orange County, California was terrified that they were going to lose their money because, this guy made astrological bets on the markets and, actually did bankrupt Orange County. So they've come a long ways. But even before that, they had begun this rise of getting rid of these multi-vendor plans. They went to single vendor. The employers hired consultants to get this work done. And, so there's a whole roadmap there. And nearly every state, like I said earlier, has a fiduciary law on the books for the 457. So just make those laws applicable to 403B, and the 403B can follow the same path. It's there. The big difference, Bob, is that it's not a huge difference, but a lot of the 457 plans were based on group contracts. And in 403B, almost all of them are individual contracts. So the employer has no control over all of the money that is currently in their plan. Zero control over it. There's a few different ways to get some control over it, but they can't just tell a vendor to move that money to our new single vendor. They actually have to, they basically are everybody's starting from scratch. They start from scratch with their single vendor plan, and then they have to solicit each individual participant to move their money to the new plan. So it's a big lift, and that's why there's very few people who want to take that on. But I think the ones who have done it, the rewards have been really amazing.
Yeah. So as you describe your work, I'm reminded of the mythological
the artwork for our next book, Dan.
Boulder uphill every morning. We watch it roll down the hill again, but that's not the case. The boulder's not going all the way down the hill, I don't think.
That'll be on my epitaph.
I think it's Sisyphus, right? Who did that? I think, yeah.
I can think of the title for the book. We moved the boulder a little, not very catchy.
All right. So I want to ask about what financial advisors who are listening to this podcast can do, especially the members of the Investments and Wealth Institute who have CPWA, CIMA designations, RMA designations. But before I do that, I want to have a little fun. I asked the AI bot, I forget which one, Chat or Perplexity or Bard, what are some common issues with 403B plans? So this would be like a teacher who maybe goes on to the AI machine to say, hey, what's wrong with my 403B? I'm going to read what the bot had to say.
Love it.
Historically have included high fee products like annuities and limited investment options. Lack of oversight compared to 401k enables issues like high fees.
They just look at 403B wise.
Can be overwhelming rather than beneficial. Products with surrender charges lock teachers into plans. Some districts don't act as fiduciaries in teachers' best interests.
Scott, they're going to put us out of business. That's basically what we say every day.
I bet they cited you. I didn't look at the citations, but I bet you're cited.
That's encouraging though, Bob. I have to say, that is actually, I call that a little bit of a, something to be proud of.
I think it's great because I test the bots a lot. And what I typically find is they get some stuff right, some stuff wrong, and then there's some significant material omissions. But on this one, I think they nailed it.
Yeah, I agree.
Yeah. All right. So, our audience are financial advisors, members of the Investments and Wealth Institute. What should they be doing as they think about advising districts or advising teachers on how to invest money? What can they do to be proactive?
I'll turn this over to Scott in a moment, but I will just say, in being at this 20 plus years, the overwhelming majority of people want to talk to a financial professional. The problem is all the people in schools are non-fiduciary salespeople. So if you are a fiduciary advisor, there is a desperate need for your services. Scott and I mentioned these free 1-hour Zoom education sessions we do. Scott always says at the beginning, I am taking on no more clients and no more clients associated with 403(b)(y)s, just to honor this nonprofit status of our website. And they always say, do you know anyone? Who can we go to? And we point them to the usual places like Garrett Planning
markets
Network,
here. There's one where you can do essentially consulting work for the school district.
And Scott's got
helping
resources and a lot of knowledge about how to serve this market.
Very different than what a financial planner does. And then the other market is actually working with the individual educators. And I think one thing that gets lost often is that, people shouldn't have to pay. Like, the problem with the 403(b) is like you have to pay somebody to get into it. There shouldn't be a middleman to get in. It should just be simple to get into. And it's not. It's like people don't really need a full-on, full-time financial planner just to enroll into their 403(b). I mean, they end up needing one because they end up with 40, 50 options and 100 different products. But in reality, they don't need someone to enroll them. And you're not going to make any money as a financial advisor enrolling people at $50, $100 a paycheck. And nor should you be doing that. That's not a good use of your time. But there are a lot of teachers who need actual personal financial planning. And they want someone who's going to work in their best interest and not this Reg BI best interest. Like, as a fiduciary, someone who is required at all times to place the interest of we'll say the client ahead of their own. And the Reg BI, I feel, was a major mistake in that it's completely confused the marketplace. Now, any random person that calls themselves an advisor who has an IAR will simply say, of course I'm working in your best interest. I'm required to by law. Well, no, that's not true. That's not true at all. I have to work in your best interest except when I don't want to, and I disclose it in a document that you're not going to read. So I don't buy it. But it's so confusing to the end participant. And I think that's a major problem that hopefully will be fixed. I don't have any confidence that it will, but we'll see. But for people who really want to work with educators on a fiduciary basis, it's something that they really need to work on in terms of they need to understand the defined benefit system really, really well. And then they need to understand the 403(b), the 457 markets. I wrote a book in 2016. It's called Wild West, Providing Fiduciary Advice to Public School Employees. I'm not looking to make money on this book. I've never made any money on it. You can buy it on Amazon, but honestly, if you just send me an email, I'll send you a PDF copy of the book for free. I want more advisors to be in this on a daily basis. And I'm telling you, these are the best people in the world. They are so amazing. My wife's a school teacher. That's how I got into working with educators. And man, the fulfillment that comes from working with these people, understanding their pensions, and helping them to make better decisions with their retirement plans, get on track for retirement, and not make the mistakes that a lot of them make in getting to retirement and retiring is so fulfilling. And I love doing it. And I think a lot of advisors got into this business for that sense of fulfillment and have been pushed towards, you got to gather assets, you got to get your 1%, you got to do this, you got to do that. Well, a lot of people listening to this, they're already successful. They already have a business that's paying them enough money. And I'm not saying you're not going to make money working with teachers. I built an entire business on it. But this is a way to give back. If you've already got a successful business and, maybe teachers don't have enough assets to work with you. I'm telling you, you want to work with these people. You want to work with educators. And I say educators, not teachers, because educators encompass teachers aides, principals, cafeteria workers. My father-in-law is a retired bus driver. The campus counselors. So there's a whole group of people who are involved in education, and They not only need, but deserve the best financial advice that they can have that is always 100% of the time in their best interest, not part-time. So, I mean, I think it's tremendous business that you can build, but also will be very fulfilling.
Yeah. It's interesting, Scott, that you say that, because I often think a lot of advisors turn away from giving advice in the 401k market and presumably in the 403b market because there's no money to be made in the immediate now, right? There's no AUM fee to charge. There may be a rollover, but maybe it's decades from now, right? And so it's a very low return proposition in terms of my revenue as a producing advisor.
I think for some people, yes, and then for others, especially sort of looking to build a business,
them being producers,
you can do this in a way that is completely different than the way that I built my business. The way when I got into this business, it was AUM or nothing. It may be some hourly, because I remember Garrett, love Cheryl Garrett, by the way, and I think the hourly work. I think it's tough to build a business on hourly work. But I got to tell you, I send so much hourly work to a couple of people that I trust 100%. And they have a high hourly fee. And I'm 80% of the people that I send to them actually work with these people, and they're willing to pay that fee. You have the XY network, XYPN, where they work on some sort of a retainer fee, depending on who it is. We have teachers who have literally, this is not our goal, by the way, but we have teachers who have literally left the classroom, got their CFP, and built a business, like a 6-figure business within 2 years, and are now full-time financial advisors, not doing assets under management. And there's nothing wrong with assets under management. I do assets under management. I also do hourly fees. But I was kind of surprised to see it. And I'm so happy to see it, because it shows that there are other ways that you can build a business. So someone who's new to the business, there's opportunities there. People who have an established business, I think there's opportunities there. And whether you're looking at this as a money-making opportunity or something to give back, I think both are going to be great.
Yeah. So I could talk about this for a long time, but my boss will yell at me if I go over 40 minutes. So before we wrap up, is there anything that we missed or anything that just bears reemphasizing?
I would just say, if you want to become more familiar with the issues around the K-12 403B, obviously come to 403bwise.org, but also we had a short podcast series produced called Learned by Being Burned, Teachers in the K-12 403B. And in this series, teachers share first how they got burned, then how they learned, and how they began advocating for change. The last episode, the 5th episode, a school benefits official from Montgomery County Public Schools in Maryland literally details step by step how he took this district from multi-vendor to ultimately single vendor. So there is a recipe there.
All right. Well, I'm going to take the last word. Scott, Dan, thank you ever so much for sharing your knowledge with us. It's greatly appreciated.
Thank you for all you do.
Thank you for listening to the Exceptional Advisor podcast, brought to you by the Investments and Wealth Institute. If you've enjoyed this podcast, please subscribe through iTunes, Spotify, or our website at www.investmentsandwealth.org/podcast to get the latest episodes of our Exceptional Advisor podcast series. For additional resources, updates on events, and exclusive membership deals, visit www.investmentsandwealth.org.